pause for a second. I just can't handle this thing here. How do you drive value in your business? Is it opportunistic or is it planned? Is it spontaneous or is it predictable? CEOs are always looking for the best next profit-making opportunity. But in driving value, are those CEOs doing it in a reactive way or a proactive way? You see, 98% of CEOs pursue growth in a reactive way. Think for a moment. What does growth look like for a CEO in a reactive mode? What do you think, Pat?
It's scanning the market, always trying to be aware of the environment, but choosing things that look like they have potential.
There you go. Right.
I think it's waiting to find out what your customers are asking for and then coming up with something.
Exactly. Tim.
Checking the headlines and seeing what the big trends are. There's a lot of headlines on it, must be important and go in that direction.
Exactly. So a reactive CEO is one that's happy to get any opportunity because they're desperate for cash to finance their operation, and they're struggling with commodity prices in an increasingly competitive environment. They can't get the best talent because their goals keep changing. Yesterday one thing, tomorrow another. Cash, it's always a challenge. CEOs experiencing reactive growth have a lot of risk. Pursuing reactive growth is a lot more risky than proactive growth, because proactive growth is about pursuing your optimum growth strategy. What's your optimum growth strategy? Optimum means pursuing the strategy that delivers the highest return with the lowest risk. Because you're pursuing a strategy of your passion, which means you can execute that strategy better than anyone else. That's why I call it the optimum growth strategy. Any other strategy is suboptimal or risky. You know, only 2% of CEOs pursue growth proactively. Only 2% of entrepreneurs pursue their optimum growth strategy. Think to yourself and share with me, what does proactive growth look like for a CEO pursuing that? Amy, what do you think?
Willing to take risk, think beyond, outside the box, do things that hasn't been done before, and be a leader in the industry.
Being a leader. Chris?
Having a strategy.
Having a strategy. Exactly. A proactive CEO is clearly someone who has a choice of client relationships. They're willing to pay them premium prices for their unique possibility thinking. They're easily able to get the best talent because their passion is contagious. Cash? Not a problem. They're a magnet for cash. Proactive CEOs experience profitable growth, fast and safe. So the question at hand is, how could you shift, you might be thinking this question, from reactive growth to proactive growth? The answer is you need a plan. A plan with rules. Rules to make sure that you can be laser focused on pursuing your optimum growth strategy. Rules that prevent you from becoming scattered and dilute the value that you can build. Rules to be able to keep you driving value in your very unique, passion-driven way. Rules are what create proactive growth. 6 months ago, I decided that I was going to actively manage my investments, a little bit like John does. My husband and I decided we were going to protect our resources and we were going to do this management ourselves. I went to school to determine how to actually invest in good quality stocks. I was getting pretty good. I was very excellent at selecting companies which had very healthy financials that were growing very rapidly and were trending up. But I wanted to play safe. So at the same time as I would purchase a stock, I would simultaneously create a contingency sale, about 3% under the most recent support. I wanted to make sure that if the stock turned against me, that I wouldn't lose everything I had. And I thought that there was logic in this because I could continue to profit just simply moving my contingency sale up as the sale of the stock increased. I was pretty happy about this, and I was doing pretty well in the market. Several quarters went by, and my stocks were just rising. However, all of a sudden, the volatility of the market increased. I got really frantic, downright emotional. I actually started looking at my stocks, and I was wondering, well, maybe I made the wrong choice originally. I watched these stocks every day, but it didn't do anything. The volatility kept increasing. Next thing you know, I lost any profit I had in any of my positions. In a couple situations, I actually lost some principal. One of my coaches asked me, Stefania, so what are your exit rules? I realized I didn't have any exit rules. I had entry rules, but I didn't have any exit rules. You see, sometimes you can actually believe that you're being proactive when you're actually being reactive. For an investor, you need an investing plan to be able to achieve your goals. As a business builder, you need a value-driving plan to be able to keep on track to achieve your optimal growth strategy. So what you really want is a plan with rules. That plan needs to have 3 attributes. You have to define your success. You have to outline your rules, and you need to have a routine. You have to define success in an actionable way. You need to outline your rules because it takes a team. And you need to have a routine to make mid-course corrections. Imagine what it would look like if you had such a plan. Think how you might be able to build on these kinds of goals. Definition of success. I will pursue my optimal growth strategy to achieve the highest return with the lowest risk, as detailed in my corporate resume. And I will evaluate and gauge my performance relative to my current financials against my goals. Being able to have an actionable definition like that is critical, not only for you, but your team members. Now that's step number 1. Step number 2 is who remembers?
Outline the rules.
Outline the rules, exactly. I encourage you to think about 4 different elements. Watch list, entry guidelines, exit guidelines, and risk management. So, for watch list, I will maintain a watch list of the most important relationships that can help me achieve my optimum growth strategy. Not just clients, but vendors, employees, financial sources, trusted advisors. Entry guidelines. I will only accept relationships that evidence that they value us and our approach. Just imagine how you could avoid a lot of time waste by having a rule like that that's used across the board in your company. Now the next rule is one that a lot of people forget. Exit guideline. I will exit a relationship by reducing the concentration of that relationship by 25% in each of the following occasions. I will reduce a relationship by 25% when that relationship becomes less innovative. I will reduce a relationship another 25% if the revenue decreases. I will reduce concentration further another 25% if this just becomes not a source of energy. And I will reduce the entire relationship if it becomes an excess of concentration relative to my safety. This is a way of capturing all those telltale signs that we all know are important, but because they're emotionally challenging, we don't take action unless we have a rule. Now the last step, the last rule is risk management. I will not be hostage to a single source. Not customer, not vendor, not financing source. That's a way to avoid a lot of pain. That brings us to the third step. Can you remember what the third step was?
You have a routine.
Have a routine. And have that routine to make mid-course corrections. Annually, I will convene a team discovery process to make sure we have our corporate resume and update my value-driving plan. Monthly, we will review our financial statistics compared to our optimum growth strategy goals. Daily, all team members will be executing our determined rules. With a value-driving plan like that, everyone knows how to drive value in your company. A value-driving plan like that gives rules that allow you to stay on track proactively to be able to pursue your optimum growth strategy. So, instead of being exposed to reactive growth, like 98% of CEOs, you have the opportunity now to follow your passion and achieve proactive growth and be in the top 2% of CEOs. When you do that, you get some very special attributes. You get to get cash on your terms, you get to profit from your best profit-making opportunities, and you empower your team to help you drive value as you define it. All it takes is a value-driving plan with 3 rules, 3 steps. The first step is
Outline success.
define success. And the second rule, second step,
Outline the rules.
outline the rules. And the third step is
Routine.
follow a routine. So, are you ready to create your own value-driving plan?
Yes!
All right, let's do it.